This is the Trading Psychology Podcast. This is VP, creator of No Nonsense Forex and author of the book No Nonsense Forex Trading Psychology. And with me, as he is every week, is Robb Reinhold.
Hello, everybody. This is Robb from Maverick Currencies. Nice to see you again. I've been trading since 1997 and have seen a whole bunch of changes in trading in the markets over that time.
And it is no surprise we are sponsored this week, as we are every week, by Maverick Currencies. And I don't know if you guys knew this. Some of you have talked about this in the comments a few times. Maverick has its own options trading division. Robb, tell people more about that.
I started in 1997, and I was actually one of the very first traders at Maverick Trading. I learned there was an actual office you could go into where they provided a computer and you could trade there. And it was called Maverick Trading. And it was such a great positive experience to be able to sit next to other people and to talk about trading. It definitely helped my progression as a trader. At the time, it was all equities. We just day traded equities. And then over the years, we all started to learn about other asset classes. And I really got into options. And in 2000, I got into options and really realized this is way better, because the thing I love about options is you can completely quantify your risk to the penny. There's literally no way you can lose more than that. There's always slippage in Forex, and there's slippage in stock and options, and there's gaps overnight. But the options, you can completely quantify risk. And for me, I had a hard time in the beginning of honoring my stops, and every now and then I would move them and it would cost me. With options, I would just set it at the amount I was willing to lose, and it took care of itself. If you are interested in options trading, or you're already options trading and you want to take a look at trading prop in options trading, maverickTrading.com will be the website to go to.
Perfect. And those of you who are already with Maverick, you understand the amount of care and time they spend on you just in the crypto department or the Forex department. Imagine that same level with options trading. Give it a try if you're interested. But we are in episode 9 today. And we foreshadowed this last week in a very not so subtle way, because last week we talked about dealing with losing streaks and slumps. Those are typically temporary and sporadic. Sometimes losses extend even further. You have a bad week, bad month, or even a bad stretch of 3 months. And that's a whole different psychological mountain to overcome. Because then, you absolutely do feel like a failure. You do feel like you may not make it. You lose trust in your system. And this is something we really need to talk about, because if it hasn't affected you yet, I promise you it's going to. So, Robb, why don't you open us up here?
Whenever you have a block of statistics, let's say that I had a trader that did 100 trades, and the first 40 trades were all positive, and the last 40 trades were all positive. Now, that is a phenomenal 80% win-loss ratio. But what if I took the block in the middle and I analyzed that? If I just showed you those results, you'd say, oh my gosh, that's terrible. During that block, that trader may have felt absolutely terrible. And it really is all about the time frame that you measure things over. And that's really what I want to talk about in this episode, is the time frame that you look at your actual results. Because whatever time frame you look at, it might be good or bad compared to another time frame that you could look at. It really helps to be looking at the correct time frames when you're looking at your trading results. In my first years of 1997, it would take me 30 minutes to drive down to the Maverick Trading office, and I would sit there and make trades. My mood on the drive home was completely dependent on my profit and loss for the day. Now, if I had a great day, boy, that car ride home, I got the music cranked, everything's great, I'm feeling like on top of the world. If it was a bad day in P&L, I would drive home either in silence or listening to like some goth or some Smashing Pumpkins or some sort of emo music to feel really sad. But as you can see here, every day it was a different roller coaster. After a while, I was exhausted, and I just remember thinking, okay, look, I've had bad days on Tuesday before, and by the end of the week, everything was fine. So don't overreact. Don't look at things on a day. That's stupid. You should look at them by the week. So I actually started to look a little bit longer, and now my drive home on Friday was where I either had the music blasting, having a party, I would come home to my wife and I'd say dumb, crazy stuff like, let's go shopping. And then the next week, I would come home and she's like ready to go shopping. I'm like, no, we can't even go out for dinner tonight. It's been a bad week. As you can see here, the emotional toll that places on you is really tough as a trader. And it was really tough for me in my first couple of years.
It's so funny you say that, Rob, because this didn't have anything to do with trading because I didn't have to drive anywhere. Your money is very inconsistent day to day and week to week in restaurants. And that's what I did for a very long time. I felt the same way early on in my career. Every day was like a win or lose. There's never anything in between. And it's even funnier that this happens in restaurants because you can't take a negative in restaurants like you can in trading. If I didn't make what I thought I should have made, then that ruined my day too. And you're right. That changed the music I listened to. That changed what I did when I got home. If I was in a relationship, it changed that whole dynamic once I got home. It wasn't until later till I realized, okay, you got to stop looking at this day to day because that's going to drive you crazy. That's when I really started to open it up and look more week to week and even month to month. And I tried to share that with my coworkers, but restaurant workers are the most manic depressive people on earth. And no matter how much sense it made, it just never mattered. They would still find reasons to complain and try to bring the rest of us down. I've gone through that myself. The only reason why I don't have gray hair all over the place right now is because I finally made that switch and stopped looking at things on a day-to-day basis and even on a week-to-week basis too, because I've said on my own podcast before when I had my old one of the things that really made me not become a huge spender later in life was just how inconsistent everything is in my industry, just like it was in yours back then. You might have a great week, but you're afraid to spend that money because next week could be an actual zero. There's just nothing in town. You don't get called in for shifts or you get called off, whatever the case is. I understand. And the only way to remedy that is to look at things on a much larger scale.
In our last episode, we talked about dealing with slumps, and we talked about how valuable your backtesting is. Patrick, will you go through just how people can look through their backtesting and get a better perspective on what their actual mood is going to be during those moments?
We talked last week about how if you have a group of maybe 3 losses in a row, 4, 5, even 6, go back to when you back tested your entire system and see if that ever happened during the 3, 4, 5 years that you actually went and back tests. I guarantee you it has. It probably has multiple times. The odds are just that it did. But your back testing has no emotion, so it just stayed the course. You have the results right in front of you. You know how it did at the end of the day. And chances are those results are very good or you wouldn't be using it right now. The same goes for this. If you want something actionable here, instead of just looking for a series of losses, take any monthly period and see how many losing months you had. I guarantee you it's a lot. It's probably more than you think. And if you want to take it even further, when we talk about maybe you just had a bad quarter, take any random 3-month block and look and see how it did. It's going to win, but there's going to be times where it lost too. Your system experienced the same thing you're experiencing right now. The difference is your system didn't care. It was dead inside, like we've talked about on the podcast, and it just kept going. You can do this with longer time frames too.
And I think while you're going back through this exercise, I think a really healthy thing to do would be to think about how you would feel at that moment. If you find a block where you were really terrible for 6 weeks on your results, I want you to sit there and think about, oh my gosh, how will I feel? How do you think I would have felt at this point? Because what happens is when you put yourself in the situation of how you're going to feel at that moment, it's going to actually help you for when you actually get to that moment. You're going to remember this exercise you did and say, oh yeah, you know what? I was prepared to feel this way. I was prepared to feel dejected and prepared to feel like I might want to quit. But I remember in my backtesting, I didn't quit and it actually got better from here. I think it's a very valuable thing to not only look at the data, but actually think about and really contemplate how you would feel at that moment. That's going to be very powerful to help you out when it actually happens.
I love that idea too. Like you already know it's going to happen. So prep yourself for it to happen. And then when it does happen, it won't be so shocking because it was pretty much supposed to happen. I think if you go into every month and every quarter saying, hey, there's a decent chance I'm going to take an L for this entire month, for this entire quarter. If you can not let that thought affect you and just trade the way you trade anyway, then when good results come, it's actually kind of nice. It's really surprising. And then set yourself up for losses again in the next month or the next quarter. Prep your mind and say, okay, I don't think it's going to happen, but there is a chance that I could take an absolute L here. So if it happens, it happens. I'll dust myself off. I'll go to the next one. The shock comes is when it surprises you. The power of positive thinking is one thing. I get that. But if you expect to do really well and then you don't, I think that right there is when emotions can take over, because it was totally unexpected. You had a dream, the dream died, and you're like, okay, now what do I do? That's the situation you really want to avoid. I'm not saying go into everything you do in life expecting to fail. Go into everything you do in trading and understand that there is a possibility that this might not be your month, that this might not be your spring. If you can at least understand that, then it won't hurt so much when it actually happens, because as your back testing has shown you, it's going to happen.
If there's anything I could remove from my trader screens, and I wish I had this ability, I wish I could completely erase profit and loss. And frankly, I wish I could also hide your account balance. And I've actually said this to a lot of traders, and I said to them, imagine that if I told you I'm going to give you this account, you have no idea how much money is in it, and you have no idea what the P&L is, and I am going to pay you $100,000 for the year if you've averaged 200 pips at the end of every month. Now, people look at that and say, 200 pips, well, I could do that. Well, that's actually fairly difficult to do. But imagine if you had no idea of the P&L, you had no idea of the account value. Would you trade differently? And the answer is yes, you would. If you are simply being paid for the amount of pips you generate, all of a sudden, that P&L is meaningless. That P&L isn't going to mean anything to you. It's meaningless. It's not going to affect you in any way. All you're looking at is pip count. Stop looking at money. Stop looking at P&L and start looking at other things. What do you think, Patrick?
No, I like that, because if you can take actual dollars and cents out of the equation, I think that does a lot, because when we see our account go down $300, we think to ourselves, wow, that's my entire bills for the week that I can't pay anymore. That's a vacation I'd planned on taking, but now I might not be able to do it because I'm 300 in the hole. It completely eliminates that end of the psychological, what's the word I'm looking for? Something that can take you down.
Pitfalls?
You guys get what I'm saying? Pitfalls, yeah. Any way you can eliminate those things, the better. I'm not sure how you would do that on a screen, but if you can program it or you can find a way to take that off, I do like that idea.
It's very easy to just delete a column. In most softwares, your P&L is simply a column. Do yourself a favor and erase that column. It's a very simple right-click, delete, and it's gone. Don't have P&L up in front of your face. Yes, you're going to have to check your account balance, but I would highly recommend you don't do it as much as you possibly can. Because then all of a sudden, you're trading for pips. You're trading for something else. The dollars don't matter. You're just trying to get it right. And now the focus is on a totally different mindset of what you're trying to accomplish. One of the things we shared in an earlier episode is the trading in blocks theory. Instead of looking at every trade as this binary thing of win or loss, no, you don't even take a look at win or loss until you get to a block of 20 trades. Once you get to 20 trades, then you stop and you say, what's my win-loss? What's my profit factor? What are my numbers? All of a sudden, you see how that takes all the pressure away from the individual trade, and it gives you this bigger perspective of what success truly is.
Now, that's a great way to get rid of that particular pitfall. But at the end of the day, we're still going to be positive or we're still going to be negative, and we're still going to be positive or negative over a longer period of time. Assuming we're negative for, let's take it even longer. Let's just go maybe a month or a full quarter, a series of 3 months. What are some of the actionable things we can give our traders to deal with situations like that, where you just feel like a failure and you feel like you're starting, further back than you should? All this, long-term dread comes in. Maybe this isn't really for me. Maybe my system's not that good. How can we get rid of things like that? Because it's all nonsense at the end of the day.
Well, episode 8 basically covered that. Basically covered like how to make sure it's not you, how to make sure that the market environment is conducive to your system. And then the third thing we talked about was keep swinging, but maybe cut position size or do things a little different. There's really not much that you and I can say, Patrick. We can pat people on the back and we can tell people it's no big deal. It'll get better. That doesn't really help. You just have to believe in the work that you've put in, trust in your system, Make sure you're not the problem. Make sure that the market is the right environment for your system. After that, you really just have to put your head down and trust that all the work you put in is going to pay off. The first thing you need to do is shift your paradigm on what success is. Now, a lot of people always think it's about the money. And look, I know it's about the money. But the money brings with it all sorts of psychological problems. So if you can frame success differently, all of a sudden, you're going to have a lot less pressures on you. One of the things we do at Maverick is we say, if you have a positive win-loss and a positive profit factor by the end of the month, we'll bump you up. We'll bump you up to more capital. What happens is that trader is no longer worried about the money. The trader's worried about their trading numbers. When you're worried about your trading numbers more than the money, you do things right and you don't get all the psychological pitfalls. Change your goals. This is not about money. The money is simply a byproduct of your system. Another thing we talk about is success is, did you correctly implement your system religiously every single time for the entire month? If the answer is yes, that's a win. You did a great job. You may not have made money, but that was perfect trading.
And I think that's really great too, especially if it's your first probably 2 years in trading, because if you have journaled properly and you have made comments where comments need to be, you're going to see that you rarely have a clean month of trading to where you didn't make any mistakes at all in terms of following your system. So even having a goal to where, okay, I'm going to pare my mistakes down by half, or I'm going to take it all the way down to zero. That's a giant step. I don't know if you realize it or not, but just simply having that as a goal puts you so far ahead of most people that stumble and bumble over systems or don't even follow a system. If you have a good system and you can follow it cleanly without making any mistakes, regardless if there were wins or losses or how many of each there were, that is huge. I don't think you understand how rarefied air that is. So even aiming for something like that, even when real money's on the line, especially when real money's on the line, that's a great goal too. Reframing that level of success, whatever it is, to me, I think that's bigger than money. I think it's a lot bigger than money. What do you think?
Absolutely. How you frame success is exactly how you're going to react to the results. If you say that I'm a successful trader because I implemented my system perfectly, you're going to feel great at the end of the month. If you're saying I was supposed to be up 15% for the month and I'm not, you're going to feel like a failure. They were the same results, but one was a success and one was a failure. Now, another thing I did early in my career, I started out day trading equities. That's what I started out with. And my first year and a half, that's pretty much what I did. And then I started to learn about options trading. And I said, hey, let me dabble over here. And I started to learn some other strategies that were very different than day trading equities. Day trading equities was this intraday trading. You were in, you were out. That was your P&L. But then I got into options where you were making trades that would last a week, 2 weeks, 3 weeks. It was much slower, but it was also much more consistent. And then I started to get into some longer term trading, stuff that lasted a couple of months to maybe 6 months. And you can see that there were periods of time where my day trading was doing terribly, but my options trading was doing well and my longer term stuff was doing well. And all of a sudden I didn't feel the pressure anymore because I said, hey, these other two are performing well. I don't need to freak out. I just need to follow my system. What do you think about trading other markets, Patrick?
Yeah, I mean, I'm glad you brought that up. And for one, I can concur with you. When I made the switch personally, and like I said, this isn't for everybody, from trading intraday to the daily chart, so many psychological, bugaboos just completely fell off. And that was such a big move for me. And I'm sure a lot of people who listen to this channel as well. But trading other markets, gosh, if I haven't said this 100 times on my own channel, I do get comments from people saying, hey, I've had a losing 3 months, 6 months, an entire losing year. And I'm like, in what? And it's always one market. It's Forex, it's crypto, it's indices. It's because that's all they trade. And I think people are under this weird misconception that I need to get really good at this one thing first before I transition somewhere else. Well, no, if you understand technical analysis, it works across the board, maybe with just a couple cosmetic changes here and there. If you need help, on my channel alone, I show you how to trade Forex and metals and oil and indices and crypto and it's the little subtle differences between the two. So there is no excuse for not doing this, because there are going to be times, and we've spoken about this before, how the market just doesn't allow you to do well. But if you're trading other things, something is always moving if you're a trend trader, for example. So if you feel like a failure in Forex, for example, but you've been a success in metals, then you don't feel so bad, because you always know you have something you can fall back on. And that's a bit of a transition into something we're going to talk about down the line. If you put all of your eggs in one trading basket, well, of course, it's going to affect you when it doesn't go well. But if you're doing other things and those other things are showing a bit of success, it totally offsets the losses, even if those losses are higher. Can't recommend that enough. What are your thoughts on that?
That is a natural evolution of a trader. Everyone gets into one asset class and they think, oh, this is it. This is what I'm going to do. And then over time, you start to realize this asset class can be a little unpredictable at certain times. And by adding on different asset classes, all of a sudden, you have this whole world. I've been trading now for over 25 years. I trade everything. Anything that's a ticker symbol that has a price that moves up and down, I trade. I don't care what markets I trade. So in 2018 and 19, when the Forex market was not all that great, guess what? I traded very little Forex and I traded other markets, and it was really great. And then when Forex came back, it was great to pop back into Forex. It didn't matter. I was basically like a moth to flame. Wherever the activity was, that's where I went. And I had no allegiance to one or the other because I understood all the markets. I could have never done that my first couple of years because I just didn't have the experience. But the natural evolution of a trader is that you are going to start to add other markets. You're going to start to add other time frames. You're going to start to add other strategies. Options trading is great in the fact that we do lots of theta strategies, meaning time decay, where they're not directional. You're just waiting for time to bleed out. That is totally different than the Forex market. And you could see that while the Forex market maybe is dead and the equity markets aren't really going anywhere, that strategy is going to make a lot of money while you're waiting for things to change. Highly recommend to learn other markets. Give yourself some time. I didn't get there my first year. It took about a decade until I was really trading multiple markets.
And you said something that I want to touch on towards the end here. That's experience. No matter how great the market treats you, let's think of like crypto in 2020 or 2019, something that, like, if you were a trader, it would have been really hard not to make money if you had any discipline. That first year, I would not expect you to be a winning trader. You know why? It's because of experience. If you go back and look at your very first year in a journal and look at how many of those trades were losers because of something you did that you were not supposed to do. And on our channel, we heavily focus on eliminating losers because they really factor in big to the bottom line. And you had, let's just say you had a large chunk of trades there that probably shouldn't have even happened, or trades you passed up on because of your lack of experience or your timidness or whatever the case is, that should not have happened. And how much did those factor into your bottom line? Maybe that's the reason why you're losing too. But look, it's expected. So all of you first-year traders out there, all of you traders that are in your first 2 years, I would expect you to lose mainly because you don't have any experience down yet. And I can't even express how extreme that is until you get to the 4 or 5 year mark and you're able to look back at those first two. And for all of you who are 4 or 5 years in, you know exactly what I'm talking about. All of those dumb mistakes that shouldn't have been there in year 1 or 2 are probably leading to these bad months, these bad quarters, or at least some of them. So remember that too. It's going to get better. You just have to stay the course, 1, and 2, recognize those mistakes and fix them. Let's not rule that out.
Every trader gets to a point where they are good enough to make money, but there's 1 out of 10 trades that they let go against them that ruin all of the numbers. That is a point where everyone gets to, and that's usually around year 1 to 2. For a lot of you, you don't need to learn anymore. You've already learned enough. What you do need to learn is how to eliminate that 1 trade out of your 10 that you just screw up. That's the toughest part, and that's where this entire podcast comes into play, the trading psychology. It is very easy to learn what I call the X's and O's of trading. It's not hard to learn a chart. It's not hard to learn what a breakout is. It's not hard to learn Elliott wave theory. Do you know what's hard? It's when you've had 3 losers in a row and your position is approaching your stop and you want to move it so bad. That's hard. There's no books to teach you how to do with that.
Okay, so without burying the lead, Rob, should we tell them about another way to make this all not hurt so bad?
We talked about how important it is to have other markets. And really, the other markets are there to bring in potential income while your main strategy is not doing so well. Well, let's talk about other things we can do to bring in money because it is so much easier. Imagine if you had $1 million in the bank. Well, $1 million is actually not that much anymore. Imagine you had $100 million in the bank. Would you treat your current trades that you're in right now differently? And the answer is yes, because you have no pressure. There's no pressure there. Having these other streams will absolutely help to take the pressure off you.
And by streams, he doesn't just mean trading other markets. He means other streams, which is a perfect segue into episode 10, which, as you know, is going to be next week's episode. So stay tuned for that. We'll go ahead and wrap this one up. Rob, is there anything you wanted to say on that note now that we're towards the end here, or should we just go ahead and wait for episode 10?
I just want to remind everyone, reframe what success is. Reframe it from money, take away P&L, and reframe it in a different way. I promise you, you will feel better about what you're doing than if you take a look at P&L.
I think that's perfect. If you take money out of the equation, or if you just equate getting better at what you're doing with success, so much of this goes away overnight. I totally agree. For episode 9, thank you for joining us. This is VP. I will see you next week.
Goodbye, everybody.